and Rosenthal recently entered the equipment finance market with a strategic acquisition of Accord Equipment Finance. In today's podcast, we will learn more about what motivated the acquisition, how this move expands Rosenthal's footprint, and how the acquisition fits within Rosenthal's long-term growth strategy. But before we begin, I want to tell you about Monitor Suite, the data, research, insights, and information to power better business decisions. There is no content resource for equipment financiers of all levels that can make this kind of weekly impact on your business and in your career. For more information, visit suitebymonitor.com. I also want to thank today's podcast sponsor, Stripes Leadership Program. Stripes is the leadership development program for the equipment finance industry. This 10-month program launches with a 3-day intensive transformational leadership launch and also includes group and individual coaching, business workshops, executive roundtables, transformational workshops, independent working cohort groups, and much more. Learn more about the program by visiting stripesleadership.com. Hi, everyone. I'm Rita Garwood, Editor-in-Chief of ABF Journal and Monitor. Joining me on the podcast today are Paul Schuldiner and Mike Wells. Paul, can you tell us a little bit about yourself?
Sure. Again, Paul Schuldiner. I'm the Chief Lending Officer for Rosenthal Rosenthal. We're an 85-year-old family-owned and operated commercial finance company in a wide space of different finance products for the small to middle market customer base.
Mike?
And I'm Mike Wells. I'm Senior Vice President of our capital markets for Rosenthal and Rosenthal, as well as business development on the equipment finance end.
Great. Well, excited to talk with both of you today. As you know, many people have heard, Rosenthal and Rosenthal recently acquired Accord Equipment Finance. What motivated that acquisition?
Sure. So Rosenthal has always been approached. One of our core products is our asset-based lending product, which primarily revolves around financing of receivables, inventory, occasionally real estate, occasionally equipment. And we were seeing a lot more opportunities where people were coming to us looking for a one-stop shop solution. Therefore, basically looking for us to play not only in the short-term working capital revolver side, but also given the influx of manufacturing businesses that we were seeing, we were consistently being asked to provide the more longer-term equipment financing and lending options. And we would do that on occasion, but it really wasn't a skill set that we would say that was our strongest. So therefore, when we saw that this was continuing to occur, we also had developed, hired a business development person in Chicago. And we felt that because of that, in the Midwest, we were going to even see more of these types of opportunities. It made sense for us to explore the opportunity of adding the equipment leasing product to our suite of products that we could, again, operate throughout the balance sheet and provide both short-term and long-term financing capabilities.
That's fantastic. So how does equipment leasing fit into your broader growth strategy? You just kind of outlined all the things that you do. I did forget to mention that it was the U.S. portion of Accord Equipment Finance that you acquired the assets of. Can you talk about just long-term what you expect to achieve with this acquisition?
Sure. Yeah, I think a couple of the key things with our broader growth strategy is that we've been known primarily as the largest privately held factoring company in the U.S. For many years, and that's been our core product. We see that business has evolved quite a bit from what we call our traditional non-recourse factoring, which has primarily served the consumer goods world for companies selling products into a retail channel of distribution. We added a recourse factoring product almost 2 years ago now, which gave us the ability to look at other industries that traditionally our non-recourse product would not, such as business, janitorial services, commercial landscaping, pharmaceutical manufacturing. So we were seeing the ability of expanding our financing capabilities outside of necessarily the consumer goods space, which most people know us for. So with asset-based lending and recourse factoring as two drivers, along with PO financing, as a third product. We were looking at the strategy of how do we diversify ourselves, from necessarily being that the factoring business is kind of the only key product that we're known for. We wanted to be known as sort of a kind of a providing more broader solution to the middle market business community. And again, what I mentioned earlier is that we kept getting asked to provide this piece of the financing puzzle, meaning the long-term financing with respect to equipment. And we felt that acquiring this piece as part of our broader strategy of diversification, product diversification, and being known as a one-stop shop solution provider across the spectrum of financing needs was something that the market needed, something that the market, we felt that we were in a strong position to be able to respond to that, given our, longevity.
So are there specific asset classes in general that you are planning to focus on from an equipment finance perspective? I know you mentioned there were several that you couldn't, several industries that you could not work with previously. But are you hoping to branch out into any specific equipment finance asset classes?
Mike could probably address that
Yeah,
better. Mike could, yeah.
Yeah, I mean, a couple industries that we're going to focus on immediately are manufacturing and healthcare. Obviously, those are both industries that are CapEx intensive. We already had a focus, Rosenthal, on manufacturing with our existing ABL business lines, but the Accord team is bolstering this with both their existing clients and equipment expertise. If you look at the manufacturing space and industry over the last several years, the manufacturing equipment itself has evolved rapidly so much over the last several years with the introduction of robotics, and just the pace of that will only increase with the addition of AI collaboration in our minds. So the necessity to replace obsolete aging equipment over the next several years has never been more important for manufacturers to stay relevant, really, in the face of competition. And this provides Rosenthal a fantastic opportunity to provide additional solutions to our existing client base in the form of equipment leasing. And then if you look at healthcare, that's another industry that Rosenthal isn't heavily concentrated in to date. Fortunately, the Accord team brings both expertise and a strong client base within healthcare in our equipment leasing portfolio. And given how fast technology is also changing in the medical industry, it's just another great opportunity for Rosenthal to provide financial solutions for an ever-evolving industry. So those are going to be two of our core focuses right off the bat.
That's great. Yeah, especially I've heard a lot over the last few years about, onshoring with manufacturing, and after post-pandemic, it's been such a big thing too. So definitely growing.
Yeah. We obviously, a couple of the food and beverage space, beauty and wellness, those are some set of the manufacturing world. We also, a little over a year ago, we also obtained Exim delegated authority in terms of their working capital program. So that's another piece to the puzzle that we bring for exporters, again, that we were providing the working capital piece for, but also now having the equipment lease capability for companies that are looking to, expand their export capabilities, but may not have the manufacturing capacity, but by having the equipment lease option is something we can bring to the table alongside to help companies that have a diversified exporting strategy.
That's awesome. So let's talk about, integrating the teams. I know when you have two different companies and you're bringing them together, sometimes it can be challenging and there's a lot of hurdles. What is your plan to integrate Accord's team with your existing team?
I'll comment briefly on Mike as well. I think the key for us is obviously Rosenthal being a non-bank lender, acquiring a non-bank as well. I think some of the challenges have been mitigated by virtue of the fact that we've never been a covenant-driven shop. We've always been a collateral-driven finance company, but very family-owned, very nimble in the decision-making process. I can tell you, I've been with the company 8 years now when I started the PO financing division, and the family is always empowered its senior executive team to grow businesses prudently, soundly, and realizing that they are there to support that growth We meet whenever there's a deal. We don't have a meeting the first Tuesday of every month. We meet whenever there's a deal that's on the table that needs to be addressed. So again, flexibility, being able, also the ability to provide significant amount of capital to the business. I think all of those things boded well for a relatively seamless transition from Accord, which was a non-bank lender as well. And we've known the people at Accord going back many years. Rosenthal Rosenthal used to refactor our Canadian risk with Accord's factoring division up in Canada. So there was a long-standing, mutually respected relationship between the management teams of both companies.
Anything else on that, Mike?
No, yeah, I echo that. I mean, even our equipment finance group itself was giving cross referral opportunities going back 5 years to the West Coast team for the ABL business line of Rosenthal. So we knew the team already. We would see them at all the conferences. We had a good relationship with them prior to this acquisition. So I see it as a seamless transition. And already in the first few weeks, but we're learning about each other's products, how we can integrate it with the existing client base. So it's just been a really good open experience the first few weeks of this acquisition. So I don't see many issues with the integration at all.
That's great. So can you share more just about the strategic importance of opening the new Chicago office as part of the acquisition?
Sure. We've obviously Rosenthal for many years. We were pretty much just based in the Northeast in New York. Probably over 15 years ago, we opened up a Los Angeles-based office, which has been a very fruitful endeavor. We've built that region significantly over the years, and we have some very talented people that Mike actually was referring to in terms of his interaction with Rosenthal previously. About 7 years ago, we acquired the domestic factoring business of BB&T Bank, now Truist. And we added, not only acquired a portfolio of clients and a subset of industries such as furniture, home furnishings, textile, and carpet that we did not have a strong experience in, but we also acquired a lot of talented people, and we've added to those people, particularly in the ABL world. We've added some key ABL business development people. And what we were finding is that we covered, between Atlanta, New York, and Los Angeles. We felt that part of the country that was missing geographically for us was the Midwest. And we had clients in the Midwest. We've had success in Minneapolis and in Chicago and in Ohio. But we never had somebody on the ground until a little over a year ago. We hired Andrew O'Day, who's our Chicago-based BDO. And we felt, again, going back to my earlier comments, that we were seeing these opportunities now come through the door in the Midwest in particular, that, again, we were being asked to provide more than the working capital solution just on, ABL, receivables, and inventory. There was this need for this equipment piece. So, our goal was probably I would say in 3 years, notwithstanding the acquisition of Cord Equipment Finance Group, within a 3-year period, our thought process was to open sort of a full service office in Chicago. And by virtue of having the opportunity to acquire the Accord as well as the team, which they're a great group of people. They fit well with kind of culturally, I think, with us. And by virtue of that, it speeded up that thought process of having a full scale office, moved up the time frame considerably from where we originally thought. So I'm excited about that. And I think this was sort of the missing piece of the puzzle geographically for us. As again, our goal was really to transform our asset-based lending business into a national platform versus just sort of as a Northeast business.
So you mentioned all of the people that are coming along with the Accord acquisition. Are there, certain experiences or qualities of that team that are really going to stand out and be a benefit to the Rosenthal team?
I'll give a comment or two, and Mike, I'm sure will have his. We've always been primarily, as I mentioned earlier, collateral focused lenders. the equipment lease business is a combination of both collateral and cash flow. And I think cash flow, probably the cash flow evaluation of businesses that are coming to equipment leasing is probably more prevalent in the equipment lease business than it necessarily is in the asset-based lending world. And I think the team of Accord members that come over have an expertise, I think, that maybe wasn't our strongest. And personally, on the other hand, I think we bring to the table a much more, what I would say, the day-to-day aspects of running an asset-based lending account. Clients are borrowing every day, you're getting collateral every day. Where in equipment leasing, it's sort of very transactional oriented. And then obviously over time, you're getting your principal and interest payments and so forth. And obviously you're looking at collateral, but you're really looking at the cash flow of the business, and the financial metrics of the business are probably greater and more important than, let's say, what dilution is on receivables and inventory turnover and things like that.
Yeah, absolutely. Yeah, and I'd also say, I mean, with the Accord team, you have a seasoned group of individuals with obviously both a deep expertise in the equipment finance space, but also there's a diversified background with several of us in commercial banking and finance in general. Two of us have about 15 years apiece in commercial banking. So the fact that there's experience there in a multitude of financial products, in addition to focusing on equipment leasing, makes the cross referral opportunities with the other Rosenthal business lines just a seamless process, like we talked about before. We'll be able to drive organic growth for equipment leasing from Rosenthal's existing customers. So that's one of the key values I think the team brings to the table for Rosenthal. And then obviously we have our own focus and business development efforts, to target different private and PE sponsored companies that Rosenthal hasn't targeted before. So just, I think both obviously the expertise in equipment leasing, but again, the seasoned diversified background that several of the team members brings over just allows for a better integration, considering how many product lines Rosenthal has.
Yeah. So in the press release that announced the acquisition, Peter Rosenthal was quoted as mentioning the importance of finding a partner with a credit-first approach. How will that philosophy influence your operations and decision-making moving forward?
Well, I think when we met the Accord team, we were very impressed with, as Mike mentioned, the diversified background of the key people. Not only been in, as Mike mentioned, being in equipment, but they've been in the commercial banking and workout arenas, which to us was an added value for our business as well, our existing business. And we felt that a cultural mindset, we're very, I would say, credit is very important to us. Building the business prudently, slow but steady. We're in this for running a marathon. This is not a sprint for us. And I think the way the Accord team approached their analysis and relationships with clients, I think matched up well with Rosenthal. And I think that's why Peter said we had looked at other opportunities where we didn't get that same sense. We got a sense that they're much more, hey, grow the top line as quickly and fast as possible. And that's never really been the Rosenthal way. And I think the Accord Equipment Finance Group, the mindset, the skill set and capability of the people, it matched well with Peter's philosophy of the credit first approach.
So you did talk about, cross-selling opportunities. What does this acquisition mean for current Rosenthal customers? Are you planning to offer equipment finance options to them as well?
Yeah, I mean, we identified at the time we were sort of going through the due diligence, we identified several of our existing asset-based lending manufacturing clients that where we would either provide them that equipment piece to buy new, lease new equipment. We could look at potentially refinancing that equipment piece out. We've looked at structurally. We've ordered our traditional way in ABL. The way we used to offer equipment financing was to kind of structure these facilities as a permitted over advance secured by the equipment collateral. while we still can do that in the right situation, maybe with used equipment, the ability to offer the capacity for a growing business to be able to lease new equipment and having that capability, I think that's it was very attractive to our clients. It caught their attention in the discussions we've already had.
And then what impact do you think this acquisition is going to have on the broader equipment finance space? Accord has been a player there for, many years. Are you planning on, increasing the size of the company? Like, how do you think it's going to impact equipment finance overall?
Yeah, definitely the size of the company. I mean, it's going to increase rapidly, just given the leverage and balance sheet power and funding capabilities that Rosenthal has. So it was really exciting for the Accord team to join Rosenthal from that aspect alone. As far as a broader equipment finance impact, I think this acquisition and integration, I think it's going to fuel healthy competition within the independent finance space by encouraging other independents to grow their own product suite, beyond one form of financing and focus. As you know, Rosenthal already differentiates itself from a lot of the other independents in the industry just by offering so many unique financial solutions. So I think other independents will observe this as an opportunity to compound their own growth, by adding other business lines to their own business.
That's great. And how do you plan to differentiate from the other players in the space right now?
Really, it's by offering that full product suite where a high growth company can come, not only to finance their working capital needs, but simultaneously finance their CapEx needs with solutions that are simply more efficient than what is offered at a traditional commercial bank when you're in that stage of growth.
Conversely, also, if they don't qualify for bank, and they have to then go out to the marketplace and, let's say, get a ABL revolver from one institution and then have to marry it with an equipment financing solution from another party, it's less efficient, as Mike mentioned. And I think that we feel was one of the strongest parts of adding this piece to the Rosenthal puzzle.
It's great. It sounds like we're going to be seeing Rosenthal on the Monitor 100 and the top private independents that we publish every year very soon. Anything else that is important about this acquisition that we haven't covered? Anything else that stands out to you you'd like to mention? Final thoughts?
Just my point that you just mentioned, that's our goal, is to get to where you just described. We'd like to be in that top 100 in the Monitor, and for people to get to know us. I think the world of equipment leasing and the companies that have brought Accord historically have brought Accord business and have partnered with Accord are not necessarily entities that we have known historically at Rosenthal. So we're really excited about being able to reach out to these new referral sources that we did not have, and offering the combined strength of the equipment leasing product that they knew Accord for, along with what Rosenthal's current capabilities have been and what we can do to provide, again, a multifaceted solution to these companies that may need it.
That's great. Well, thank you, Paul. Thank you, Mike, for taking the time to talk with me today. Excited to see what you're going to do with this acquisition and how it's going to unfold.
My pleasure on my end. And yeah, thank you for giving us the opportunity. We're, again, very excited. I've had read the Monitor for years on the side alongside of the ABF Journal, and now we start the process with the acquisition back, I guess, in May, June. I'm a reader, so I raised my hand. I'm a full scale reader.
Great. Well, that's awesome. Thanks again, both of you.
Thanks for having me.
Terrific. Thank you. Appreciate it. Take care.